So which is better, technical analysis or fundamental analysis? Check this video out. Hey guys, so I got a lot of questions asking which is a better use of time and also analysis. Is technical analysis better than fundamental analysis, or is fundamental analysis better than technical analysis? Quick answer to all of that: none is better than the other, because each has its own pros and cons. Each will work if you know how to use it. You know what technicals and fundamentals does? Basically, it does this. It removes the amount of emotion that you put in the market, because at the end of the day, I'd rather that you use either technicals or fundamentals, or if you can combine both, because it has its own merit. What it removes is emotions, and the more you remove emotions out of the equation, the better your trades will be. If you remove emotion out of the equation, you remove hype, remove speculation, the better and the more logical your decisions will be. And that's what it does. So let's just differentiate the two. Fundamentals, to make it easy, is it looks at the economy, it looks at which sector or industry the money is flowing into, or it looks at the company, meaning, is the company good? Is it growing? Is it undervalued? Is it producing the right amount of income? Are there some things that are changing in the company that will make it better or worse? So your buying decisions will be primarily based on, I am an investor, this is how good the company is, this is how I can put the right amount of money in it, because I see that it's flowing where the economy is headed, it's in the right sector, or it's beating out its competition because the company is so good. So it's you looking at its debt level, gaano ba kalaki yung utang niya, its liquidity, does it have enough cash to be able to settle its obligations should sales start to dwindle, or is it, in terms of its income and its sales, how big is it in terms of earnings up against the competition and the market in general. So to make it simple, you are looking at how valuable the company is, and not just based on what the price is. The negative side of this also, some of the companies that are good, some of the companies that are valuable, at some portions, at some times, they're not the ones that move up so fast. So it's possible also that some stocks that are good are not noticed by the market quick. Since they're not noticed by the market quick, it takes quite some time before they go up. But your advantage will be this: before everyone else starts to notice it, you are now positioned, you are now there, and you now have the ability to gain money and buy it at a lower price. The secret to make money using fundamentals is you will be able to spot opportunities that the market or everyone else in general is not yet looking at. And it also can tell you which stocks have high dividends. And I always tell people that, and I made a lot of videos about this, the name of the game is, if the company is giving out a lot of dividends, malaki yung chance that it won't close. Please remember, companies close if they run out of sales and income, and the fact that they have dividends, it means that they have more than enough, not just to give, not just to expand, not just to pay for its operations, but also enough to be able to expand as a whole. Now, technicals, on the other hand, is a totally different animal altogether. Why? Technicals does not look at value. It does not look at how good the company is, what industry, what sector is it, but it looks at primarily the market, buyers and sellers. It's under the notion that more buyers bring the prices up, more sellers bring the prices down. Among the two, if you've noticed most of the videos that I've made, I'm really more of a technical analyst as well. I love technicals, but I know that I need fundamentals for me to make the right decision. So what does this have to do with everything, and what should be your goal if you're trying to navigate your way through this? Technicals tells you that if more people are buying it, the stock will go up. Technicals are also telling you that if more people are selling it, the stock will go down. Meaning, you want to enter when more people are buying, you want to exit when more people are selling. So that's where support and resistance would come in. That's where trends would also come in. You ride the trend when more people are buying, you exit the trend when more people are selling, and you just go out, you stay away from the trade. Fundamentals is so different because it doesn't want to come in when everyone is buying, because the negative side of technicals is you will kind of buy when it's expensive. You will start buying when everyone is buying already, so it's at a higher price. The only trade-off for that is, since you are buying when everyone else is buying, you're not waiting anymore. In fundamentals, what you need to exercise is the discipline to wait up until the market appreciates it. For technicals, you are buying when everyone else is buying it already. Hence, you're not waiting too long, but you're buying higher. And another thing that you need to know is this: even if you're using technicals, it's not a forecasting tool. It's not something that will help you guess where the market will be. It will just tell you to sell when the market has stopped going up, meaning sellers are now there anymore. But it will never tell you to sell at the peak, and it will never tell you also to buy at the specific bottom, because no one can know on an accurate basis where the peak and the bottom is. But what you can know is where the trend will be. Where is it still going up, or is it still going down? And that's a technique, that's a style on how you can win, no? For technicals, just follow and stick to the trend, but with all confidence that you have to buy when it starts going up. The videos that I've created talking about breakouts, it also means that you're buying it at a higher price because there's a large shroud of buying that's happening at that point in time. So, to answer your question, best way to weave around it, you use fundamentals for investing. You use fundamentals for position trading. You use technicals for quick trades. You use technicals also for position trading. The way I segment it also is I use fundamentals to select my stocks for position trading. Then I use my technicals to answer the question, this is a good company but I want to come in at the right time for technicals. So there's kasi a lot of people are saying na hindi, wag na mag-fundamentals kasi yung market naman nagsasabi. It depends eh. It depends on what you value. It depends on what's important to you. If what's important to you is to buy a company that's good, even if you're trading it, then you have to put fundamentals into the equation. If you notice it, and I'll say this over and over again, better buy, regardless if it's fundamentals and technicals, as compared to speculation, as compared to you guessing, as compared to you just trying to forecast what's happening. Because technicals, fundamentals is not about forecasting, but fundamentals is all about using the current data to let you know if the company is good and solid, while technicals on the other hand is you using market action, market direction, current prices to tell you if it's worth buying today. So for those who are new to this, there's so many, I have so many other videos about fundamentals and technicals that are spread across either YouTube or marvingurmo.com. But just to answer this quick question that you guys asked, they both work, but you have to find a system that works for you. Kasi even in fundamentals, there's there's so much, how do I put this? There's so much principles there that you have to pick what will you use. What are you looking at? The EPS? Are you looking at the ROE? Are you looking at the equity ratio, the PE ratio? Are you computing your own valuations? Even in technical analysis, there's so much parameters from moving averages. Dun na nga sa moving average, what moving average will you use? Will you use a simple moving average or the exponential moving average? Will you use a 20-day moving average or will you use a 50 or 100-day moving average? You will only know how good a certain parameter is if you start using it, because the way you use your moving average is also mainly dependent on the amount of time that you are using, meaning longer time frames means longer moving average, shorter time frames means shorter moving average, and also depends on the amount of capital that you are also deploying. So there, I'll put the link below for other topics that I have in technical and fundamental analysis. But if you're new to this and want to know more, I have a class on technical and fundamental analysis for Stock Smarts Manila. I'll put the link below. The classes start this March 9. So there, I hope that all of this, the narrative and the hope of me making these videos is just really to create a framework that wherever you are in the world, you can win and you can invest using the stock market. That the stock market is not as hard as what most people think it is. That wherever you are and whatever you're doing, you can win and you can use the stock market to help you reach your goals of financial freedom. That it gives you the ability to live your life wherever you are. That it gives you the ability that if you're an entrepreneur, you can focus on your business but at the same time invest. If you are a business person or you are an employee, you can climb the ladder of success, but you now have another stream of income that is working for you that will help you make money. And if you are a stay-at-home mom, you are an OFW, you can just focus on the things that you love to do, but at the same time you have an asset that's working hard for you. So there, I hope this video helps you trade well, trade strong, trade smart. Marvin Gurmo from Qatar. See you all again soon, guys, and bye-bye.